end of July. It's the last trading day of the week. It's the last trading day of the month. So some potential sort of rounding up positions for the end of the month carrying on today and tomorrow. Obviously, we've had the massive news of the Fed last night, a dovish hike. And we got this big rally. This is the euro on the 1 hour time frame. The euro here was testing, went under 101 briefly yesterday before the Fed announcement. We rallied over a whole big point here from 101 to 102. We couldn't break that, and we've reversed most of the gains from the Fed today, moving down. So that's reversed, and that's similar across all the euro, all the dollar pairs. We had a strong. Let me bring you to the end. We had a strong move on the yen overnight as well. This is the 28th. This is this morning here. So big move down. We went to 137.50, and then post Fed, we've come all the way down here to 135. Under 135.50. We're currently trading 135. We're actually back just above 135.50. So quite a significant. Quite a significant, obviously, move there. 200 big numbers there. Two big numbers for dollar yen. Obviously, now today, in the next 10 minutes or so, we've got the second big data point of the really probably the most important data point of the week following the Fed yesterday is the GDP out of the US. It's expected. I'm going to show you my my calendar, but. It's expected to come in at 0.4 of 1% for the month, but the headline, the annualized at 8%. Remember, it was negative 1.6% last time. There's all this chatter about recession in the United States. Are they in recession? Is it a recession? Would it be a technical recession if there was 2 quarters of contraction? Yes, it would. That's the given, but lots of people, particularly in Washington, are saying, well, it's not really a recession. It's just a technical issue. It's gone negative. Growth's gone negative. So we'll see where that goes. Guys, I'm only going to be here till 4 o'clock today, so I'm only here for half an hour. So get your requests in quick. Mohammed's asking about gold up or down. Well, gold rally. Well, everything lifted that was against the dollar because the dollar weakened yesterday. So let me zoom this in. Doesn't make no sense. So we had this big. What's this? Oh, dollar cat's not gold. Oh, no wonder it didn't look right. So this big uplift yesterday to 17. Well, just shy of 1750. We couldn't breach that 1750. This must be Andrew's chart from I don't know what's this. It's the 30-minute from yesterday, I think. So we had hello. That's the daily one. Sorry, I'm just not on this workstation. Sorry, 30. Yeah, there we are. So that's the 1 hour. We had this big uplift yesterday into this 1740 zone. It went through it and it's come back into it. So we're in this support area here, 1739, 1736. Andrea identified yesterday. And this is the resistance area. So we went through it, but we're back into it now. So it's looking like the gold might be weakening from here. But if it holds 1736, that's generally, that would be quite supportive. The midline of the Bollinger Band, the 20-hour moving average, right there at 1736. Then the 50-hour moving average there at 1729. And then this looks like Andrew's. Is that a daily downtrend? I don't know what that's. I won't be on the 30-minute. I don't know what that line is. Is it 15 minutes? I don't know what that is. But anyway, yeah. So this blue rectangle here, Mohammed. This is our support. It's right on the, where are we? Where's my midline of the Bollinger Band? No, we're right on below the Bollinger Band here on the 1 hour, on the 30-minute time frame. The 1 hour time frame, more importantly, is that support there. So we're right on support. So it's been down for the last 4 hours. If this holds, it might be back to the top of the channel. If this breaks, we could be back to the 50-minute. See what the data looks like to drive things, Mohammed, going forward. Dixon, good afternoon. Davis, good afternoon. Can we look at pound Swiss? We can have a look at pound Swiss if it's here. It's not one I normally associate with being here. I can't see it immediately. Let me just drag it in. Where's the euro gone? Where's the pound gone? Pound Swissy. Pound Swissy. 1 hour is bid so far today, or has been bid so far today. themes, but we've rolled over. So we've ran into resistance at 116.85. Let's put that in there. 116.85. We broke the initial break of the midpoint of the Bollinger Band. We came down. We put in a fractal low here, where we are now, literally again. So, and the 50 hours provided support. So if this continues to decline, a breach of the Bollinger Band down here could take us down to this zone here from yesterday. Is that yesterday? Yeah, yesterday, 27 down here, 115, 116 zone themes. But as you can see, it's still constrained by the Bollinger Band. So we spiked out, but we're still, this current hourly chart candle is negative. We're under the 20, into the underside of the Bollinger Band, that's negative. The Bollinger Bands, if you can see that, see how they're pulling in at the top. They've nipped in here. See, the top has come down, the bottom has come up, so we've got a bit of a squeeze. And when we get a squeeze in the Bollinger Bands, we tend to get a bit of an expansion. So this could be, well, this is caused, this top coming down. Hang on a second. The top coming down, I've still got a few minutes to talk about this. See, the top coming down here and the bottom coming up is caused by this increased volatility with bigger candles we've had here. So very weak here this morning in the Asian session. We ran into this 1685 area, couldn't break it. Now we moved down quite aggressively this morning, but we're still contained by the Bollinger Band. So we've broken into the under half of the Bollinger Band. Support is there. That 50 hour on the bottom of the Bollinger Band coincides. So your next support is 1672 there, things for support. And resistance is the 1685. So we've got a 20 pip range there at the moment on that 1 hour time frame. If you want a different time frame, please let me know. Euro Swiss. Can I see Euro Swiss? That's overwritten, isn't it? Euro Swiss. I'm just going to overwrite this one if you don't mind me. Euro Swiss. Let's overwrite them. So that's holding this. It's got the same format that it's had on the other. That's why it's got these yellow lines on all the time. So let me just take some of these indicators off. Object list. Get rid of some of these trend lines. Let's clean those on next time. I'll pull one in on here, it would be okay. So, Euro Swiss, 1 hour. We were down yesterday. Stochastics here, very fast moving stochastics, 533, are looking to move up. MACD's just rolled over and moved down here on the 1 hour. So we've pushed, interestingly for me, we've pushed through this fractal low zone here. So let me just file. I'll just insert a little triangle. Hang on a minute. My little rectangle here. So there's a little support zone sort of here on this 1 hour time frame, which we're into now. So 97.35 is the floor, and we spiked through it earlier. We've had some weak or heavy German inflation data, 8.5%. The overall German GDP has come in at earlier. We were, where's my German GDP number gone? 0.9 of 1% for the month. But the most important, heavily populated Bavaria and what's the other region that has caught my eye? I've forgotten it now. That escaped me. But anyway, I know Bavaria was heavier than expected, and certainly we've had actually the data's in my numbers must be right. So US GDP, advanced GDP is coming at negative 9% versus plus 1%. That's a negative reading, guys. Advanced GDP coming at negative 0.9 of 1% compared to a positive 0.4 or 0.5 of 1%, depending on which consensus bar you were looking at, but that's a negative reading. The advanced GDP, the price index is also hotter. It's coming at 8.7% rather than 7.9% from 8.2% last time. So that's a hotter number. And then to cap it all off, weekly claims is back up over the 250 level. It was 251 last week. this week it's coming hotter again, or worse again relatively. It's only 5,000, but it's coming at 256, worse than expected as well. So that's not good as far as the market might be concerned for a dollar recovery from here. So let's just go back to the Tycho, if you don't mind. I'm just going to go back to the euro and the dollar itself. So contracting at nearly, this negative number minus 0.9 is nearly 1%, isn't it? That's a contraction. So we've had two quarters of contraction. That's a recession. When everybody what everybody calls a recession, that's a recession. Technical or otherwise. But we've had two consecutive quarters of contraction. Pound here hardly moving here, 122, 121.11. The euro has actually bounced up a bit. We're at 101.41. So the stronger dollar we've had in the last 3 or 4 hours has been reversed. So euro's up. I guess the yen will be up as well. Yeah, yen is up here at 135.36. So again, it's not a massive move, but it's certainly moving on that data. So let me just recap. US GDP has come in negative. It's coming at negative 0.9 of 1%. It's a contraction. First reading for the second quarter. It's not great. It was minus 1.6 for the first quarter. That's two consecutive quarters of contraction. And that is a recession, ladies and gentlemen. How long it's going to last for, who knows? It might be over before we can blink. Lots of bulls are saying that. But let's see how it goes. This, for me, really the dominance of the inflation figures has continued to increase. It's broadened, it's deeper, it's all over the place. But there's some signs of it easing a wee bit. But at the moment, 9.1% is the US inflation rate. The Fed yesterday talked about getting it down to 2%. That's their goal. We've had a very, very strong dollar, so you could expect some sort of cashing in of profits, basically, especially here on this dollar yen rally we've had this over the last few weeks. So dollar yen now at 135.27, still record highs, 20-year highs still for dollar yen. And the Bank of Japan and the central and the government in Japan still maintaining their very, very accommodative stance, even as inflation starts to creep up in Japan as well, because they're big importers of energy, and it's obviously a lot of it's been driven by the energy costs. But certainly, it's a weaker dollar on that data dump. GDP, that'll grab the headlines coming in at a contraction. It was expected to rise. The advanced GDP price index also up as well, so that's higher than expected. And unemployment claims a tad higher than expected as well, back over that 250. Remember, we were down at under 200,000. We still got a very, very, very tight jobs market in the United States. So that's one thing that is different to the 70s, because in the 70s we had a high unemployment, we had a contracting economy. Here we got a contracting economy in these two technical measures of the first half of 2022. But jobs are very, very tight and earnings are still pushing up. But that obviously adds to the inflation story as well, earnings and wages going up as well. So anyway, back to the charts. That was the data. Dario, what were we looking at? We were looking at Euro Swiss for you, weren't we? Where was he? Where's he gone? Euro Swiss. So again, Euro Swiss is broken to the downside. This is Swiss getting a bid on that because it's a safe haven currency, a bit like you'd expect the yen, like we saw the yen move. If we look at this, have I got a Swiss chart here? I'm not sure I've got a Swiss chart here. I should have, but I can't see. It's all got a bit. Let's see, I can't see that. But anyway, Euro Swiss is broken out of this key 97.35 level on that news. So that looks like that's breaking down. The big move was earlier here on this 1 hour chart. Okay, we can't make a decision on this hour candle, but if we were trading the 15-minute candles, for instance, you've been short from earlier today. This is broke under the second half of the Bollinger Band this morning, and it's just continued to unwind. This is our, I don't know what this blue, that was that support, wasn't it? And we're broken through it. So that's more shorts pushing that down. MACD, the current histogram is beyond the signal line, so the signal line could start to move down again, and this rise in the stochastic, so you might peter out, and RSI is testing that oversold area. So that's definitely in a downtrend now on that 15-minute. The 30-minute is also in a big downtrend, broken out of that, and the 1 hour, obviously wait till the candle completes in half an hour on that one, but that's down, my friend. Right, guys, I do need to go at the top of the hour, so I'll be as quick as I can today. So where do I get to? Oh, there's lots of you here. Okay. Are you guy trading synthetic MT5? No, we don't trade synthetics, Dixon, my friend. Be careful with synthetics. They're derived by the broker that you're trading with, so be careful with those. Euro USA, how's it going? Well, it's Euro's picked up. It was coming down all day, but that weak US data, the GDP in particular. So this was the big rally we'd had yesterday, back to 102 from 101, under 101. So the euro remains very much pressured. If we go up to the upside, that downtrend hasn't changed at all, to be honest. We're down. We're just testing. That's the daily time frame for the euro, Charles. And you can see it's just, it's a dollar dominant, can't get over the blue line. That's a 50-day moving average. Look at those fractal highs there, down again, even though we're in the top half of the Bollinger Band, rolled over into the bottom of the Bollinger, bounced off the Bollinger Band, couldn't get above the 20-day moving average again here beginning of July, and down, under parity last week or week before last. And we're back over, and currently 101 is our support and 102 is our resistance. So that's the daily time frame. We come down to the 4 hour, you can see there we're bouncing about, breaking 102 earlier in the week ahead of the Fed, come back down, and now we're back down again, the euro on the 4 hour time frame. The 1 hour time frame, that was yesterday. This is the big rally against the 100 whole point move here, 101 to 102. From the euro, and that's been given back today largely. Interestingly, it didn't get as low as the 101 again, but it's euro's come back on that weak US data. So see how we're going to finish. As I say, remember, it's been an absolutely key week. Yesterday's announcement was the most important announcement of the month, and tomorrow is the end of the month as well. So be careful there. But Charles, that's still biased to the downside. But we've had quite a nice bounce in this current hour. Okay, Charles, that's not good. Okay, oh no, are you guys talking? I don't know what you're talking about. Euro will go down more. Well, parity's been tested once. There's lots of buyers down there. Interestingly, the FX options market, there weren't many options expiring under the parity level. So at the moment, we've got quite a large 100 pip range. Excuse me. Excuse me a minute. There we are. Excuse me. We've got a large 100 pip range here for the euro, so that's what you want to be playing for the rest of the day and into tomorrow as well. So if this breaks 101 to 102, at the moment we're right in the middle of that, to be honest. Nasdaq, somebody's asking about Nasdaq. Can Nasdaq fall to 12,300 levels? So of course it can. Anything's possible when you're in the markets. 12,300 for Nasdaq doesn't seem that far away. Where's my? I've got 12. I've got the Nasdaq here. I've got the 500. I've got the UK. I've got the Nasdaq for some reason. Okay, let me file a new chart. Indices. Yeah, let's do this is it's the USA 100 futures. So this is the futures, but it's put the template on we're looking at today. So let's pick a template. Which one we're using? Anyway, template. So let's zoom out a wee bit. That's a bit tight, isn't it? What's this? Is the 1 hour. Let's go to the daily. Let's zoom in. Obviously, we've been moving down quite significantly. And let me zoom out a wee bit. There we are. So we've had a week 2022 thus far. First half of the year into bear market territory. Currently support this week or this month. Let me just put on the close. There we are. That's this is May, June. So our low here got to 11,200. We've rallied up since then here on the daily time frame, and there's lots of bears. Lots of bulls saying that this is a rally. But if I zoom in a wee bit, you can see, is it over yet? Sorry. You can see here, we go back to the beginning of the year. There we are. We go back to the beginning of the year here. This is our high. So this is the beginning of the year here. So this is our high, all-time high. Not all-time high, but high for 2022 was on the first trading day of the year. That's usually quite a bullish sign. As we can see, we were consolidating our highs here to 16,500. But since then, we've declined, haven't we? So if I zoom out a wee bit, you can see here, you can see what's been going on. If I just bring these sites. So we went down, then we retraced. This is about a 5% retrace. Then we had a big 10% retrace. But the low got lower, didn't it? That low was lower than that low here. So here in March, we were down here at 13,000. Then we rallied into the 200 hour, into the 200-day moving average. Then we went lower and we went lower again, didn't we? So this low was lower than the March low. So here we are in May at this low. Then we rallied again, much weaker than the last rally here. And then we've gone low and produced the new low of the year here in June at 11,200. But now we're rallying. Interestingly, this rally, this bounce here, Tambawanga, it is basically it's shallower and longer than we've had before. See how that one was quite vicious? That one was very steep, went steep and came back. This was steep but didn't last very long. So hence the the bulls are saying, well, this looks quite positive. So on the short term here, at the beginning of July, we went over the 20-day moving average, which is positive. Here, let me zoom this up. Let's bring it into today. So beginning of July, we went over the 20-day moving average, the white line here in the middle of the Bollinger Band, and we haven't been below it since, have we? So again, that's a positive sign. We went into the 50-day moving average, rejected it, came back to the 20-day moving average, but we didn't want to break under it. Here, that was a key day here for the bears, for the bulls here, when we had this big positive day last week or week before last, 19th, big positive candle providing new July highs, supported by the 20-day moving average and breaching the 50-day moving average and touching the outside of the Bollinger Band. Okay, top of the Bollinger Band is now moving up, so this is relatively bullish pattern from this big break here. But remember, the initial break over the 20-day moving average, the early adopters would have been here. Last time it did that, it came back straight away, didn't it? But this trend line is support now. This bullishness is relatively support, and this big bullish day here on the 19th remains relatively bullish. So what you're next looking for as a bull would be a break of here of 12,930, and see how that all fits together quite nicely. So we got this rising wedge, rising triangle, and we need to break that key 13,000. That wasn't your question, was it? Your question was, can it fall to the 12,300 level? Well, of course it can. 12,300 is just, I guess you're talking about intraday, but 12,300 is here. So yeah, that's a key sort of support zone. Here on the end of day bait, the big support is here. The trend line, let me zoom that up. The big support is this cluster here. So we got a 50-day moving average. Let me take that one off, let me show you. So we've got the blue line, which is the 50-day moving average. We've got the middle of the Bollinger Band, which is the 20-day moving average, which has crossed the 50-day moving average, which is a bullish sign. And we've got our trend line, which is not very well drawn, actually. Our trend line should be there, really. There we are. That's me. But you get the point. The support area is here. So the support area is around about the 12,000. So it could certainly retrace to 12,300. It could certainly retrace to 12,000. If it stays over 12,000, that's bullish. Obviously, it stays over 12,300, that's even more bullish. But that's what's going on now. I don't know what time frame you're trading this, Tambango, my friend, but we had a strong day yesterday. It was 3 big down candles, all reversed in one candle. That's a bullish sign. But We did have a big, huge move yesterday. It was an outrageous sort of 4% move yesterday with Nasdaq. And obviously, it's a big day this week. It's a big week this week with all the big tech companies reporting earnings. So certainly it could fall to 3,000, 12,300, which is probably around about there. No, it's not. It's a bit higher than that. Oh, excuse me. But certainly we can. Where's my tissues gone? Oh, it's one of those days today. Excuse me. We certainly can drop to 3,000 today. Whether it's today or tomorrow, who knows? If it tests that, that's probably quite a bullish sign. But we're up at the moment, 12,591. These are the futures market as well. Remember to bang on, my friend. So let's have a look. Who's next? I don't know if anybody's on Facebook. Uruguay will go up. Will it indeed? Okay. Charles says euro will go up. Well, it's gone up on the back of the. Obviously, talking to one another on the back of that bad data. Yes, certainly the dollar's weakened on that. We just looked at that, haven't we? Mr. Sam, could Aussie yen continue? As he's broken through support level. Let's have a look at Aussie yen. Key. Remember, the Aussie yen is a key sentiment indicator of sentiment. It's a sensitive pair, and when things are bad, the yen gets bought and Aussie gets sold. When things are, the risk is coming back into the market, the Aussie yen tends to rally. So Aussie yen on the daily time frame. Let me check that's up to date. So this is our daily time frame. So we'll see we're chopping around in a bit of a channel at the top here. So our June high took us to 96.87. So call it 97 within a smidge of 97. In fact, it's not short than that. On an end of day basis, we'll just get a bit more. Yeah, 96.50 really is the key level. We're at 94.28 at the moment. Down so far today. This is today's candle. Let's go down. I don't know what time frame you're looking at, Mr. Sam, but this is a key level where we are now, 94.25. Look at this. 1, 2, 3, 4, 5, 6, 7. 7 days since we breached it very aggressively here on the. Oh dear. Here, we breached it very aggressively here on the 19th. And remember, it's that 19th day again. That was our floor for July, all the way down there at 92. So we've gone from 92 to 95.50. That's our resistance. So resistance is 95.50. Our support is 94.25. That's our daily channel, if you like. It's where we are at the moment. So a break below there. But the key support is the 20-day moving average, which is below the 94.25 level. Sits at 93.75. So 94.25, 94 the round number. Then 93.75 is your support zones. To break up higher, we're down today, so we need to, strong day, up day yesterday, up day on Tuesday, down day Wednesday. Sorry, one more time. Monday was up, Tuesday, Wednesday was up. Thursday is down currently, Mr. Sam. So you're saying has broken through support level. Could this continue? Well, maybe. This is the daily support we're right at now. I guess you're talking about lower time frame support, the 4 hour. So yeah, that turned short there at 8 o'clock this morning, Aussie yen on the 4 hour. On the 1 hour, it went short here much earlier this morning at 4 o'clock server time, having rallied to that area we've just been talking about, 95.50. Couldn't hold it, rolled over quite nicely. Wait for the break. There's the break of the lower into the lower half of the Bollinger Band. The 5 and the 9 EMA have crossed. That's what these green and yellow lines here are. And then we've gone short, retraced. 9 kept us in, and then it could have got out there and re-entered there. And that's short. Yeah, that's broken through the 94.25 area at 94.15. So yeah, that's gone short, Mr. Sam, and it is continued to the downside. We just looked at Nasdaq, haven't we? Yeah, Nasdaq. I hope that answered your question, guys. If you want it more detailed on a particular time frame, do let me know, because otherwise I'll talk about the hour and the daily, basically. So if you want a bit more detail, but basically, just to continue that story, the Aussie yen's been short all day, basically, as far as I'm concerned. So Asian traders went short here at 4 o'clock my time, down, retraced down, and it's legging down again. We're at 94.13, so that's overall, as far as sentiment in the market's concerned, that's negative. It's been that the yen's up, and remember the yen's had a really good. It's the strongest currency in the Asian session. It's had a really good night. So next up was, what do you think will the dollar yen continue? Massambo, I guess you're talking about will continue down. Well, it's looking that way, isn't it? Never fight, Massimo. Never fight a big candle. Okay, look at what's happened. Look at the example there. Littleish candles here as we rallied up to 137.50. It doesn't matter what time frame. This is happens to be the 30-minute time frame. Huge candle here sideways, but we went down further again. Huge candle here this morning. Here to the downside, went sideways, retraced, but we didn't retrace. I mean, a good tip is when you get big candles like this, these Mazobu monsters, if it doesn't retrace 50% of the direction of the candle, you're expecting more weakness. So here we went down, went sideways, rallied up, couldn't break the 20 period moving average again. Here we did, so perhaps we would have looked to go long here, but it didn't phase. See what happened? Couldn't get above where we were before, wherever that was, 135.70. Another fractal high had been put in here. This was high, so that was looking quite positive, but it rejected it, so it didn't break. That would have actually triggered long. Didn't work out. Out here, and then a big short here on this one, breaking through the previous low, breaking through this fractal lows here at 135.25 for our, what's this, the 30-minute traders, and that's continuing to go lower. Let's go up. The hard time frame, the 1 hour time frame, big candle consolidation, big-ish candle, certainly bigger than but it was to the downside. Big candle consolidation, and then another big candle now. So that's looking like that's trying to find a floor, 134.79 now. So what's the higher time frame saying? That's the 1 hour. Where's the 4 hour support? Well, there's not clearly one here, is there? We're down here on the 4 hour. Fractal tweezer top, nice big short here last night, and it's continued to unwind on the 4 hour. Not last night, that was 27th, is that right? Yeah, 27th, the 8 hour candle. So midnight last night, more shorts on. It's been short all day. Dollar yen, and the daily. Obviously, the daily's in this has been in a massive up run, but now we're breaking down, and like we did here. In May, we're under the 20-day moving average, and that's the first time since May, but we went down quite steadily here. It's been quite aggressive, but we did go all the way to within, 140, 139.70, wasn't it? 139.40 was the high, a 24-year high, 1998, the last time dollar yen was trading up here. It wasn't going to last forever, and we've got a combination of all sorts going on here. We've got the story of more or less dovish members joining the Bank of Japan board. We've got profit taking from this massive run going on. We've got the end of the week, we've got the end of the month combined as well. So you'd expect some sort of movement down here. So where are we now? So here on an end of day basis, we went under the 20-day moving average for the first time here on the 22nd, and we haven't been back above it since then. We closed right on it on Tuesday, but we were down again yesterday, and we're down again today. So that's the support. So next support, to answer your question, Massivo, is here at the 50-day moving average, which sits at 134.20, and the bottom of the Bollinger Band, which is at 134.50. So you've got a 30 pip sort of window of support there. But if you look to the left there, so if that breaks here, you can see what happened. It was this these three aggressive candles here, this nice pattern formation that took us higher. So the next support is really the close of that day down there. So 132.15 is the next support here from the candle pattern point of view. That's the next big support, 132.50. It's 2-day support. But really where we are now is the range. So there's that 134.15, and the bottom of the Bollinger Band's coming down to meet. So that's your next support or target to the downside if you're still short. The 50, be careful messing with the 50-day moving average though, ladies and gentlemen. It's 50 days, so it's 2.5 times thicker than the 20-day. The 20-day is already broken. But if we scale back this, the 50-day, even when we were down here at 114, it's held all that time. We have to go all the way back to January before we were trading under the 50-day moving average. So that looks like a big support area, and there's potentially some buyers there. If that does get breached briefly, there's some big buys down here at 132 as well. So these are key levels for dollar yen. We're still at 20-year highs up here at 134.50. That's for sure. Let me just, if we go to the monthly chart, for instance, it's still massive, isn't it? We're still all the way up here, and that peak from 2014 takes us back. Takes us back here to 124. So historical highs for dollar yen, and I'm surprised we haven't seen more intervention from the Bank of Japan. They keep talking the talk, but we'll see. 134.50 at the moment. 132 big support area. 134.15. Looking at our Ichimoku chart on the weekly chart earlier on this week, we were looking at 133 and 131 as key support levels, which took us down to this level on the weekly chart. There's the 131 level here, which takes us back to end of May, beginning of June time here, 131, and then it's 131, 133, just up here, our first sort of target area on the weekly chart for a dollar yen, my friend. Guys, I'm going to have to go. I've got a call at the top of the hour, so I hope that was useful. There's no more messages coming, which is quite useful. I hope I answered all of your questions. So stay safe and trade carefully. Remember, tomorrow is the end of the month, end of the week as well, so potentially more volatility. But let me just recap on the big news of the day. It's been the fact that 3 big news items today. We've had German CPI coming in hotter than expected, 0.9% for the country. Spanish unemployment was better than expected a little bit, but that was the big news. But the real big news is the fact that the US is technically in a recession. GDP, first reading of GDP, the advanced number came in at minus 0.1 of 1%, so nearly 1% contraction in the second quarter for US GDP. Unemployment claims have also ticked up and held back over significantly now, over the 250,000 level. So again, not great positive data for the US economy. So we've had the euro recovering from another test of 101 at 101.16. Sterling continues to hold the bid at 121.40. Euro just done, and yen. Let's go down to the daily. The yen continues to have the upper hand against the dollar with that weak data at 134.75, continues to move down to the downside. And let me just have a quick look at the Nasdaq. What's the Nasdaq? Well, the markets might actually be doing something. Nasdaq trades at 12,575, and it's still obviously at half an hour before market opens. And Bitcoin is held the rally from the 20,000 level. We're holding 23,000 to the upside at the moment for Bitcoin and cryptos. Lifted yesterday, obviously, with the weaker dollar following the dovish outlook from, a hawkish Fed, because it went to 75 basis points. But Powell didn't really give any clear indication whether it was potentially 50 basis points or 75 basis points next time. But the market took the lead that it was relatively dovish, or that's what the markets interpreted, which is why we had the rally. Let me find the rally in the equity markets. This is the Nasdaq yesterday, big, huge 4% rally there. That's the intraday. We've got the daily. This big positive candle we were talking about earlier. Nasdaq up 4% yesterday. Expected possibly a bit of a retrace today, but it's still futures here, still positive. We're still 30 minutes away from the cash open. Obviously, later on tonight, we got the big behemoths of Apple reporting earnings. Snap was yesterday, Qualcomm was yesterday. Lots and lots of companies coming out, but watch those Apple earnings later on. We've had most of the others, Google, and Microsoft were better than expected earlier in the week. Meta, Facebook posted their first decline in revenue in their history, a near 1% decline for revenue. So Facebook got hit after hours. We'll also have a look at those on open, or check those for open. And Amazon still to come. Shell's report huge profits. The UK major distributor of energy, huge profits as well. So energy very much in play, and lots to look forward to in this earnings season still as we start to roll out. So take care. I need to go. All the very best, and stay safe, everyone, and see you soon. All the best. Bye-bye.